So about 2 weeks ago, I was happily driving through Beverly Hills without a care in the world. I had no idea what the stock market was doing, no idea what the cryptocurrency market was doing, and I had absolutely no idea what my investment portfolio looked like. Until I received this message on Instagram saying, "Oh sweet sweet stock market, how far have you fallen?" I logged straight onto my Trading212 account and was met with a big fat negative return of £1,403, which, just for perspective, 5 months ago was net gains of £7,414. And then I went on to look at the media and I saw this. Article after article after article, which highlights that it's been the worst start to the year for stock market returns in the past 2 decades. But did I let this ruin my holiday? Absolutely not. And instead, I used it as an opportunity to further cost average my way into the market and just consistently take action on the investments which I regularly take every single month. But why exactly am I telling you this? Well, 72% of you guys who follow me on Instagram have said that you've only been investing for less than 2 years. So from that, I'm only going to assume that the current stock market conditions are definitely going to be new territory for many of you guys watching this video. And with 74% of you currently seeing negative returns so far this year, just like I have, it's certainly a tricky situation, especially if you're an investor that's perhaps a little bit newer to the game. Because if the stock market was a game, well, we've just gone from easy mode to extreme difficulty mode. From the best returns on record from the March 2020 lows right up to the highs of December 2021. It was a money printing mania where you could pretty much pick any stock and you would have made money during that period. However, we're now facing into one of the worst stock markets in 21 years where practically everybody is losing money. But during these difficult periods, it separates the investors from the gamblers, because the ones that wanted to make a quick buck between 2020 and 2021 will be the first to cash out when things take a turn for the worst. Whilst all of the investors out there on the other hand know that over the course of the next few months it's simply all about survival and taking the necessary action and decisions now, which could just leave you with generational wealth over the course of the long term when things take a turn for the better. So to leave you guys in the best possible position to achieve this, along with potentially dissipate some of the fears around stock market investing right now, I thought during this video I would share with you guys all of the information and all of the data which I have on the stock market to leave you best informed about the stock market moving forwards. And throughout the videos we touch on different topics. I thought I'd share with you guys some investment advice that you guys gave over on Instagram on how to best navigate the stock market storm which we're currently in. So let me just start off by saying bear markets happen, and they probably happen a little bit more often than you think. And in actual fact, every 3.6 years is the average frequency that they crop up. Meaning, by definition, every few years or so you can expect the value of your investment portfolio to drop 20% or more. And when these bear markets do happen, they also vary in size and scale. Here is all 27 bear markets that took place since 1929, many of which proving catastrophic, like the 1931 Great Depression and the 2008 financial crisis. But on average, we are talking about declines of about 35%. Now, of course, averages are just averages. It doesn't necessarily go to say that in this bear market which we're currently in, we're going to see an exact decline of 35%, because some bear markets only decline just over that 20% threshold, whilst other bear markets can drop as low as 60%. As we've seen when we look at the data. So it very much leaves today's bear market very much open to interpretation. And nobody truly knows how big this bear market could be. All we do know is that there is a potential opportunity here, especially for the newer investors, to take advantage of these lower market prices. And this may sound ridiculous of me to say, but actually starting out investing in the middle of a bear market is probably the best time to start investing. The reason being, on average, you could see about 10 months worth of pain within your investment portfolio, which if this average is true, then we could be certainly about halfway through the current market decline that we're seeing right now. But during that 10-month period, if you continue to invest into the stock market and continue to lower your cost basis, you will eventually get maximum benefit from the decisions which you took today during the next bull run, which will last on average 2.7 years. And again, these are just averages because the length of a bull market can certainly vary. Of course, we saw a very short bull market between the March lows of 2020 and December 2021, only lasting 1 year and 9 months. But prior to that, we had the longest bull run on record of about 13 years. So I guess you could certainly say it's short-term pain, but for long-term gain especially in today's current market conditions, which is of course why many of you guys on Instagram advise that you should have patience when you're investing into the stock market. Which, of course, certainly makes sense. But what about now? Because whilst we did very briefly touch on a bear market taking place, the stock market is now slowly starting to recover, with the S&P 500 being up about 6.5% just in the past week. It might leave many of you guys thinking is now a good time to re-enter into the stock market, as stock market prices look like they're recovering. But the truth is, based on the data anyway, there is a likelihood that there is more downside in the stock market to come. And the way for me to highlight this to you is to actually just look at the broader trends of the stock market itself. Because of course, when the stock market goes up, it's called being in a bullish trend. But when the stock market goes down, it's called being in a bearish trend. However, regardless of those trends, the stock market certainly doesn't move in straight lines. So in the context of a bear market, yes, stock market prices will gradually move down over time, but during that period of time, we may see mini rallies in stock market prices. To bring this to life, let's look at the stock market crash of 2008, where stock market prices cratered about 50%. During that period of time, we had 7 rallies in market prices, which varied from as little as 3.5% to as much as 24%. So just because the market rallied a few percentage points last week, it certainly doesn't mean that the bear market is over. We may have found some short-term support in the stock market, where we could see stock market prices rally over the course of the next couple of weeks. But I think, in my opinion anyway, this will just be the next catalyst to see the stock market actually just move one leg lower. And whilst that might feel like a shit situation to be in, as the stock market sell-off clearly isn't over, based on statistical data, it does certainly provide us with an opportunity. Because as market valuations fall and the price to earnings ratios of some of our favourite stocks become more discounted, as one of you guys said on Instagram, a wise man once said, be fearful when others are greedy, and greedy when others are fearful. And look, it kind of makes sense. Because whilst the average bear market constitutes to losses of about 35%, the average bull market, on the other hand, constitutes to gains of 114%. And some market commentators think this could be an opportunity that may be bigger than you think.
In fact, I think this is the opportunity to build a best-in-class multi-year portfolio.
Now, of course, obviously this depends on the time horizon that you have for your own investment portfolio. But with many of you guys just starting out investing, I'm going to assume that you've still got quite a long way to go. And because of that, regardless of any of the data or articles that I've shared in this video, there is one main thing that we fundamentally need to focus on. And that's the pure fact that the stock market was here 40 years ago, and it's now here. Because that's the historical picture that if it plays out in the future, well, both me and all of you guys will all be quids in. And if you just think about it logically, well, we're far more advanced now than we were 40 years ago. So if anything, the kind of returns that we've seen in the past 4 decades could be even more in the 4 decades into the future. Because the businesses of today benefit from globalization, they're more efficient, they're more advanced, we've got better technology, and businesses on the whole are more profitable today than they were in the past. So as a result, stock market returns in the future could be better than they were previously. So to cap off this video, I would certainly say utilize this time as an opportunity for your investment portfolio. Because if you can overlook the short-term pain and the unrealized losses within your portfolio, and you can continuously execute on your strategy, then as every single bit of data tells us, you shouldn't go far wrong. But if you are deep in losses right now and you're not too sure where to turn, then be sure to click on this video here, where I share with you guys how you can actually recover stock market losses despite these difficult market conditions.